On Friday, March 20th, 2026, a 9-person jury in San Francisco federal court delivered a verdict that nobody expected. Elon Musk, the richest man on the planet, worth $814 billion, the CEO of Tesla, SpaceX, and XAI, the man they call Teflon Elon because he wins every lawsuit, was found guilty of deliberately misleading Twitter investors. The damages? Up to $2.6 billion. Now, $2.6 billion sounds like a lot, but for a man worth $814 billion, it's 0.3% of his net worth. It's like finding someone who makes $100,000, $300. But here's what nobody is explaining to you. This case was never really about Elon Musk's wallet. This case is about how the richest man alive used 2 tweets to manipulate a $44 billion deal, crash the stock price, cost ordinary investors, teachers, firefighters, nurses with retirement funds, billions of dollars, and the system barely blinked. Today I'm going to show you exactly how he did it, why the fine is a joke, and what this verdict actually means for every American with a 401k. Let me show you the math. Let's start with what Musk told the jury. And this is a direct quote from the courtroom, reported by the New York Times. If this was a trial about whether I made stupid tweets, I would say I'm guilty. He smiled when he said it. The courtroom laughed. It sounds harmless. Let me show you why it wasn't. In April 2022, Elon Musk signed a binding agreement to buy Twitter for $54.20 per share. Binding. Legally enforceable. The deal was done. $44 billion. The board approved it. The contract was signed. Then, over the next 5 months, something strange happened. Musk started publicly questioning the deal he had already agreed to. He tweeted that the deal was temporarily on hold. He claimed Twitter was full of bots. He suggested the company had lied about its user numbers. He went on podcasts questioning whether the acquisition should move forward at all. What happened to Twitter's stock price during those 5 months? It collapsed from around $52 per share down to the mid-30s. Billions of dollars in shareholder value evaporated. Now here's the question the jury had to answer. Was that a coincidence or was it intentional? The plaintiff's attorneys argued that Musk's public statements were a calculated strategy. The theory was simple. Musk signed the deal at $54.20, realized he overpaid, and then deliberately trashed the stock price through public statements to pressure Twitter's board into renegotiating a lower price. Musk's defense? He was just asking questions, just being transparent, just making stupid tweets. The jury didn't buy it. They found that 2 of his tweets contained materially false or misleading statements that directly caused the stock price to drop. The jury calculated damages of between $3 and $8 per share per trading day over a 5-month period. Let me translate that into real money. The plaintiff's attorneys estimate total damages at $2.6 billion. That money was lost by ordinary shareholders, pension funds, retirement accounts, individual investors who sold their Twitter shares at artificially deflated prices because the richest man in the world was publicly undermining the company he had already agreed to buy. This case is much bigger than Twitter, said Mark Malumphy, an attorney for the shareholders. This case goes right to the heart of Wall Street. Now let me show you the exact mechanism of how this worked, because understanding this is understanding how modern markets can be manipulated by a single person with a phone. The first tweet, May 13th, 2022. Musk posted, Twitter deal temporarily on hold pending details supporting calculation that spam fake accounts do indeed represent less than 5% of users. Within minutes, Twitter's stock price dropped, not by a little, by almost 10% in pre-market trading. Billions of dollars in market value vanished because of 43 words typed on a phone. Now here's what makes that tweet fraudulent according to the jury. Musk had already signed a binding agreement. He had waived his right to due diligence on bot numbers. The contract specifically stated that Twitter's public disclosures about bot percentages were not a condition of the deal. In other words, even if Twitter had 50% bots, Musk was legally obligated to complete the purchase at $54.20 per share. So when he tweeted temporarily on hold, the deal wasn't on hold. It couldn't be put on hold. He had no legal mechanism to pause it. The tweet was, in the jury's finding, materially false. The second tweet, May 17th. Musk posted that the deal cannot move forward until he received information about bot accounts. Again, the contract said otherwise. But the market doesn't read contracts. The market reads tweets, and the stock dropped further. Now here's the math that matters. In the 5 months between Musk's first on-hold tweet and the eventual completion of the deal in October 2022, millions of shareholders sold their Twitter stock at prices well below the $54.20 acquisition price. They sold because they believed, based on Musk's public statements, that the deal might fall apart, that the stock might go to zero. Some of those sellers were hedge funds that could absorb the loss, but many were ordinary Americans. Teachers with pension funds that held Twitter stock, firefighters whose retirement accounts included social media ETFs, nurses who had bought a few shares through their Robinhood app. They sold at $35, $38, $40 a share. Then the deal closed at $54.20. The difference, the money they left on the table because they believed Musk's tweets, is what the jury calculated as damages. $2.6 billion, transferred from ordinary investors to Musk's advantage because of 2 tweets. This is not a theory. A federal jury reviewed the evidence for 3 weeks and deliberated for 3 days. This is a verdict. Now here's where it gets infuriating, because you'd think a $2.6 billion verdict would be devastating. Let me show you why it's actually a reward. Elon Musk's net worth as of this week is approximately $814 billion. $2.6 billion is 0.3%. Let me put that in perspective. If you earn $50,000 a year, the equivalent fine would be $160. That's a speeding ticket. That's a parking fine in downtown Manhattan. That's dinner for 2 at a nice restaurant. Musk manipulated a $44 billion deal, cost investors billions, was found guilty by a federal jury, and his punishment is the equivalent of a speeding ticket. But here's what makes it even worse. Musk went on to merge Twitter with xAI, his artificial intelligence company, and then with SpaceX. The combined entity is now valued at hundreds of billions. The Twitter acquisition, the very deal he tried to wriggle out of, is now generating enormous value within his corporate empire. So let me walk you through the complete transaction. Musk agreed to pay $54.20 per share. He then publicly trashed the company to drive the stock down. Investors panic sold at $35 to $40. Musk was eventually forced to close at $54.20 anyway, but during those 5 months, his public statements created chaos that benefited his negotiating position and generated billions in trading profits for people who knew the deal would eventually close. The people who lost? Ordinary shareholders who believed his tweets. The people who won? Institutional investors and insiders who held through the chaos. This is how wealth transfers work in modern America. Not through robbery, through information asymmetry. The richest man in the world says something on social media, millions of people react, and the money flows upward. Now zoom out, because this isn't just about Twitter. Here's the bigger picture that this verdict reveals, and it's a picture that should concern every American who has money in the stock market, which, by the way, is roughly 61% of American adults. In 2018, Musk tweeted that he had funding secured to take Tesla private at $4.20 per share. That was false. There was no secured funding. Tesla's stock price swung wildly. The SEC investigated. The result? A $20 million fine, and Musk was required to have his tweets pre-approved by a Tesla lawyer. Did he follow that requirement? No. He continued tweeting whatever he wanted. The SEC tried to hold him in contempt. The court watered down the requirement. Musk publicly mocked the SEC, tweeting that the agency's initials stood for something unprintable. Now, in 2026, he's found guilty again. This time for misleading Twitter investors. The fine is larger, $2.6 billion, but proportionally smaller relative to his wealth, which has grown enormously since 2018. Let me show you the pattern. 2018. Misleading tweets about Tesla. Fine, $20 million. Net worth at the time, roughly $20 billion. Fine as percentage, 0.1%. 2026, misleading tweets about Twitter. Fine, $2.6 billion. Net worth, $814 billion. Fine as percentage, 0.32%. The fines are getting bigger in absolute dollars, But as a percentage of his wealth, they're essentially unchanged. The punishment is not scaling with the crime or the criminal's ability to pay. Now compare that to what happens when an ordinary American breaks securities law. Martha Stewart went to federal prison for 5 months for insider trading involving roughly $228,000 in avoided losses. That's 0.04% of the damages in the Musk case. But she went to prison. Musk got a fine he'll appeal and probably never pay. I'm not a lawyer, and I'm not telling you whether that's just or unjust, but I am showing you the math. And the math says the consequences of market manipulation scale inversely with wealth. The richer you are, the less it costs you, proportionally, to break the rules. Here's what nobody in Washington wants to say out loud. The system isn't broken. It's working exactly as designed. It's designed for people who can afford $2.6 billion speeding tickets. Let me bring this home to your kitchen table, because you might be thinking, I didn't own Twitter stock. This doesn't affect me. Let me show you why it does. If you have a 401k, an IRA, or any retirement account that tracks broad market indices, you almost certainly had indirect exposure to Twitter in 2022. Social media stocks were included in dozens of ETFs and mutual funds. When Twitter's stock price dropped because of Musk's tweets, your retirement account took a small hit. But the bigger issue isn't Twitter specifically, it's the precedent. The Musk verdict establishes that the richest person on the planet can manipulate a stock price, get caught, get convicted, and face a fine that amounts to pocket change. What does that mean for you? It means the market you're investing your retirement savings in is a market where billionaires can move prices with tweets and face no meaningful consequences. It means the playing field isn't level. It means your 401k is competing against people who play by different rules. Joseph Kotchett, the attorney for the plaintiffs, said it clearly. This case is about people that have 401ks, kids, pension funds, teachers, firemen, nurses. And Monty Mann, a business litigation partner in Chicago, warned about what comes next. Going forward, this will have a real chilling effect. Executives and deal makers will need to think carefully about how public statements can be interpreted. But will it? Will a $2.6 billion fine that represents 0.3% of someone's wealth actually change behavior? The math suggests no. After the 2018 Tesla fine, Musk continued tweeting market-moving statements. After this verdict, his legal team has already said they'll appeal, calling the verdict a bump in the road. His exact words through his lawyers at Quinn Emanuel. We look forward to vindication on appeal. A bump in the road. $2.6 billion. Teachers' retirement funds. Nurses' savings. A bump in the road. Here's what I want you to take away from this. On Friday, a federal jury found the richest man alive guilty of manipulating a $44 billion deal with 2 tweets. The cost to investors? $2.6 billion, much of it from retirement funds belonging to ordinary Americans. The cost to Musk? 0.3% of his net worth. His lawyers called it a bump in the road. In 2018, he lied about Tesla funding and paid $20 million. In 2026, he lied about Twitter bots and will pay $2.6 billion. The fines are getting bigger, but his wealth is growing faster than the fines. Martha Stewart went to prison for $228,000. Elon Musk gets a bump in the road for $2.6 billion. The math of accountability in America has a very clear formula. The more you're worth, the less the rules cost you. So here's the question I want you to sit with. In a market where one man's tweet can erase billions in shareholder value, and the punishment is less than 1% of his net worth, is your retirement money safe? The math doesn't care about your politics. The math doesn't care who you admire. The math just is. Tell me what you think in the comments. And if you want to understand the mechanisms behind the headlines, the math they don't explain on cable news, subscribe, because this is just the beginning.